Hey, what's up guys? John here. The Federal Reserve is scheduled to post its first annual loss in 107 years this year. That is saying something. And we're also witnessing some very, very big changes occurring. A lot of people are seeing this in the banking system. Credit Suisse talking about getting a massive bailout in Swiss francs from the Swiss government. We're looking at what's going on in Europe, the chaos that's unfolding. Looking at SVB, Signature Bank, First Republic. I mean, I just got this email. Let me just put this in a context 50 minutes ago. It says from TD Ameritrade. I have an account there. I bought some stock years ago. It just sits there. I don't actively touch it, but it says, John, we're planning to move your account to Schwab this weekend, or on the weekend of May 26th, right? We're starting to see the consolidation of these banks. We're starting to see some real big changes happening in this economy. And I think what we are going to see is a level of change that we've never before seen. And as this is all happening, the FedNow program is set to happen in the next 100 days. And some of these banks are going to start as soon as April, next 2 weeks, the first week of April. There's so much going on. In this video, I'm going to cover what's going on because this is absolutely crazy. I'm going to cover it with sources, such as Yahoo and, FedNow. I'm going to share all these sources in which people are, they widely accept this information from. So that way, you can share this information with other people that may be on this side or that side. Everyone can have an open dialogue because the goal on this channel, talk about personal finance and the economy, what's really going on, and do it from a lens in which we can all have this open dialogue and discussion about, right? So take a look at this. So the year 2023 is shaping up to be a financially challenging one for the Federal Reserve. The Fed is on track to post its first annual operating loss since 1915. And by the way, today's video is sponsored by my company, GreatCreditFast.com. That's GreatCreditFast.com. If you need help fixing your credit to get out of potentially high interest credit card debt, maybe go into a balance transfer, maybe you want to invest in distressed real estate, we would love to help you at GreatCreditFast.com for a free consultation. You can go to the website or give us a call at 561-430-5900. Take a look at this. So this just came out February 13th, just a couple days ago, about a month ago. The Fed's operating losses become taxpayer losses. The year 2023 is shaping up to be a financially challenging one for the Federal Reserve System. The Fed is on track to post its first annual operating loss since 1915. The annual loss will be large, perhaps $80 billion or more, and this cash loss does not count the massive unrealized mark-to-market losses on the Fed's fixed-rate security portfolio. An operating loss of $80 billion would, if properly accounted for, leave the Fed with a negative capital of $38 billion for the year end of 2023. Now, what this actually means, the $38 billion is not a massive number. In relation to the amount of money that we spend, the money we sent into the economy, we send overseas. $38 billion is basically a drop in the bucket these days. But it's the fact that they are putting this information out there to let us know that big change is coming. That there is change coming because you can see it right now. The U.S. economy is $4.9 trillion. That's what they're saying the size is. But they're talking about injecting $2 trillion into the Fed bank to stop the scope, right? And they're talking about mainly for big banks, JP Morgan Chase, they're talking about it. They're talking about a lot of different banks. They're saying that the overall losses now with unsecured deposits, total deposits closer to $460 billion. So what I think is going to likely happen is I believe that Jerome Powell is going to continue to increase interest rates. I know some people think he's not going to. I believe he's going to. But see, the thing is, how do you combat inflation when you're talking about potentially putting in $2 trillion into to support banks? How do you combat inflation when the cost of energy is continuing to rise and everything that touches energy is going to get more expensive? Think food, products, even this shirt, everything is going to be transported on a vehicle or in a ship somewhere. And if it costs more during that transportation process, it costs more to basically build the products in which we're buying. Of course, the only way in which that cost is going to go down is if the labor cost and material cost and everything else is going to reduce, which it's not, right? We're going to see inflation continue to rise, and with it an affordability crisis in which this country has never seen before. And as that problem starts to happen, they're going to present us with a solution. And what is that solution? Well, the solution is the Federal Reserve launched an instant payment service, FedNow, in July. Now, this just came out last night. The Federal Reserve said Wednesday it will launch its long-awaited instant payment service, FedNow, in July. I think a lot of people would have loved to wait for eternity for this to come out. I don't think anyone's really anxious about seeing this new FedNow service. The instant payment network will settle payments in seconds with the capability to support consumer to consumer, consumer to merchant, merchant to merchant, and bank to bank transactions. So they're going to be able to support these banks. But what I think is going to happen is we're going to see consolidation of a lot of these smaller banks to these banks that are going to be working with the FedNow. With the FedNow service, the Federal Reserve is creating a leading edge payment system that is resilient, adaptive, and accessible, said Tom Barkin, president of the Federal Reserve, Bank of Richmond, and the FedNow program's executive sponsor. The launch reflects an important milestone in the journey to help financial institutions serve customer needs for instant payments to better support nearly every aspect of our economy. Read that again. The launch reflects an important milestone in the journey to help financial institutions serve needs for instant payments to better support nearly every aspect of our economy. According to the Fed, a mixed bank of all sizes, including the largest processors and the U.S. Treasury, are on board. The central bank is continuing to speak with financial institutions and serve providers to test the program ahead of its implementation. With the launch drawing near, we urge financial institutions and their industry partners to move full steam ahead with preparations to join FedNow. Well, these banks, they're sitting in a situation in which they have no choice but to join this FedNow. And the reason for this is these banks, a couple of years ago, they were making money hand over fist, issuing loans on cars, which a lot of these cars are upside down, meaning they owe more on these cars than they're worth, to real estate, and these real estate assets, these loans that they were originating and lending on. These loans were 2.5%, 3% mortgages, right? Refi boom, all this money that was on all these assets. Now as interest rates hit 7, 7.5, 8, I think we're going to continue to go north in interest rates. All of the debt, all of the quote-unquote assets they thought that these banks had, which were these loans secured by these vehicles and cars and real estate, commercial, residential, everything. They're going to be underwater in all these, right? They're going to need help. And as that's occurring, the cost of living is rising and deposits are going to be pulling out of these small banks, out of these banks. These banks are going to be in big trouble. They're going to need help. And that's where the FedNow can come in here and offer that service, right? Said Ken Montgomery, first vice president of the Federal Reserve Bank of Boston and FedNow program executive. Montgomery noted availability of the service is just the beginning. Yep, yes it is. And growing the network of participating financial institutions will be key in increasing the availability of instant payments for consumers and businesses across the country starting the first week of April. So, about 2 weeks, exactly 2 weeks. The Fed will begin formally certifying banks to launch the service. Early adopters will have to conduct customer testing informed by feedback from the FedNow's pilot program to prepare for sending live transactions through the system. The Fed maintains making funds immediately available will help Americans living paycheck to paycheck or small businesses with cash flow constraints by avoiding late payment fees and freeing up working capital to finance growth. Analysts at FedNow could also cut demand for payday loans as consumers won't have access. They want it to wait for a check to clear. For businesses, there could be upside for better paying suppliers on time, and businesses could embrace it as less costly and more certain way to accept customer payments. Fed Governor Michelle Bowman said last year that FedNow, which will enable consumers and businesses to send payments instantly, could offer some of the benefits of a central bank digital currency. Well, we know that's coming, right? Everybody knows that's coming. But it's just crazy to me to witness these things, these consolidations. A lot of people would have said that this would have been impossible, say a year ago, 2 years ago, to watch some very, very big banks go down. Looking at a Credit Suisse, looking at Silicon Valley Bank, Signature Bank, First Republic. We're looking at a lot of Wells Fargo is doing this emergency $9.5 billion raise. We're looking at all these financial institutions in really, really big trouble. And as that all happens, this is just perfectly presented. Literally, a week later, right? Literally 1 week later, not even, 4 or 5 days later, after SVB, First Republic, and Signature all go down that week, following week, bang, FedNow's coming out. They want to help all these banks. Crazy, right? Absolutely crazy. But I do believe we're stepping into something big. I don't think this is just going to be, some easy transition. I think we're going to start to see some major cracks in this financial institution. I think we're going to see this massive, massive wealth transfer. So if you are paying attention, you're watching this, you're saying, you know what, I think some uncertain times are ahead. The first thing I would suggest doing if you have high interest consumer debt is to get out of that as soon as you possibly can. Whether it be reducing your quality of life, to pay down debt, whether it be doing a balance transfer to get out of that high interest credit card balance to a 0% interest APR for 6 to 21 months. There's a bunch of different offers, like 13 or 14 different cards right now offering this if you have a credit score in like the low 700s. But there's certain things people can do. But I would just suggest making sure you're on a very strong footing, surrounding yourself with some really, really good people, and reading and learning and studying as much as you possibly can, and putting yourself in a clear mental state, because I think we're going to see a lot of panic unfold here. What do you think about this? The Fed posting this loss, the first loss since 1915. To me, it looks like March, April, May, June, 2023, we are going to see this huge, huge shift, societal shift. Drop below. Let's have a conversation about this. Subscribe here on my second channel. Also, if you need help fix your credit, we would love to help you at greatcreditfast.com. That's greatcreditfast.com. You can go there, schedule a call, or give us a call at 561-430-5900. I'll catch you guys in the next video. And for short form content, you can click in the banner. My Instagram is linked. Catch you guys in the next one.